Cost accounting and margin analysis.
Question 1. Why might a company show improving gross margin but declining operating margin? The correct answer is option A. Question 2. Activity-based costing is superior to traditional costing when? The correct answer is option B. Question 3. A sudden drop in contribution margin percentage suggests. The correct answer is option B. Question 4. A product with 50 selling price, 30 variable costs, and 15 allocated fixed costs has a contribution margin ratio of. The correct answer is option C. Question 5. Throughput accounting focuses on. The correct answer is option D. Question 6. Why might a company deliberately operate at a negative absorption costing margin? The correct answer is option A. Question 7. If a company's margin of safety is 25% and break-even sales are 2 million, actual sales are. The correct answer is option C. Question 8. Joint cost allocation becomes arbitrary when. The correct answer is option D. Question 9. The key flaw in using gross margin to compare retailers is. The correct answer is option B. Question 10. A company using theory of constraints would prioritize. The correct answer is option A. Solution to question 4. First of all, we must know what is the requirement and what formula we should be using. So the formula we will be using is contribution margin ratio equals to contribution margin divided by selling price. You have all the numbers, just put it in the right order and you will have the right answer. Solution to question 7. First we should figure the formula. So the formula is margin of safety equals to actual sales minus break-even sales divided by actual sales. Common mistake most do is dividing actual sales minus break-even sales by break-even sales. That is wrong. Simply put the values and do the math like shown here. You have all the numbers, just put it in the right order and you will have the right answer. If you have any question, ask us in the comments section. Also let me know of your today's score.